Krugman Unleashed: The Truth About Inflation, the Fed, and America's Economic Illusions. The economy is never one simple story. For the wealthy, it looks like a stock chart climbing from the bottom left to the top right. For everyone else, it's a rent check that grows faster than their paycheck. Nobel laureate Paul Krugman, one of the most influential economists of our time, has spent decades explaining why those two realities coexist. In a recent conversation, he broke down how economic myths, political theater, and market psychology often cloud our understanding of what's really happening. Today's episode dives into those insights: inflation, growth, the Fed, inequality, and the illusions that define our times. Let's start with the biggest misconception: that growth on a finite planet must eventually end. Krugman argues that growth isn't about consuming more stuff, it's about creating more value. Economic growth isn't a warehouse filling up with products, it's a society improving how it produces and lives. A digital economy, for example, can expand its output without expanding pollution. Britain emits less carbon today than it did in the 1800s, yet its GDP is far higher. We can grow smarter, cleaner, and more efficiently, but that requires smart policy. The challenge isn't to stop growing, but to grow responsibly. Progress, not paralysis, is the answer. Then there's inflation, the topic that keeps politicians awake at night and citizens frustrated at the grocery store. Every election cycle, someone promises to bring prices down. But Krugman reminds us that broad prices almost never go down sustainably. A small, steady inflation rate, about 2%, is actually a sign of a healthy economy. Zero inflation sounds good, but it creates stagnation. When prices fall, people delay buying, companies cut wages, and the economy freezes. The goal is not falling prices, but rising real incomes, where wages grow faster than costs. When you hear a candidate say, "I'll make things cheaper," translate that into what it really means: I'll make you believe I can break the laws of economics. So who really controls the economy? The Federal Reserve plays a bigger role than most realize. A few meetings in Washington can set the cost of money for the entire planet. Krugman warns that's exactly why the Fed must remain independent from political power. When presidents start dictating interest rates, economies spiral. Just look at Turkey, where political interference triggered 80% inflation. The Fed is supposed to be boring, and that's a good thing. Its strength lies in being technical, not theatrical. As Krugman puts it, the Fed's independence is what stands between a functioning market and a political circus. But what about the stock market? Why does it seem so strong when the public mood is weak? The answer: the market and the economy are not the same. The market prices future profits after taxes, not the daily lives of workers. If corporate taxes fall, or if regulations loosen, stocks rise even if real wages stagnate. Investors celebrate what boosts earnings, not necessarily what lifts society. Krugman says it takes major stupidity to wreck a $30 trillion economy, but it only takes a little bit of policy blindness to make it deeply unequal. The stock market can boom while living standards lag behind, and that disconnect fuels frustration. The same illusion surrounds the call to bring back manufacturing. It's a political slogan, not an economic plan. Most factory jobs didn't vanish overseas, they vanished to automation. We produce more goods today with far fewer workers. It's not about resurrecting old jobs, it's about creating new, better ones. Farming went through the same shift a century ago. The challenge isn't the loss of specific roles, it's ensuring people can find good work in new industries. A healthy economy doesn't protect every job type, it protects every worker. When it comes to crypto, Krugman doesn't mince words. He calls it technobabble plus libertarian derp. In his view, crypto remains a speculative instrument, not a functional currency. Only a tiny fraction of Americans use it for actual payments. Most of its use cases are in money laundering, ransomware, and evasion. The problem, he says, isn't digital technology, it's ideology. The dollar works because it is backed by institutions, deep markets, and law. Crypto, he argues, is built on faith in code alone. That faith has created wealth for a few, but not value for society. The lesson? Not every innovation is a revolution. Some are just well-marketed distractions. Then there's free trade, another phrase that sounds noble until you read the print. True free trade lowers tariffs and barriers, but many so-called trade deals protect monopolies instead of markets. Pharmaceutical patents, for example, have been enforced in ways that blocked poor countries from accessing life-saving drugs. That's not free trade, that's rent-seeking under a noble banner. Krugman's view is simple. Free trade can lift nations, but only if it stays about trade, not corporate power. The moral is clear. Economics without ethics becomes exploitation with good branding. Inequality, meanwhile, remains the shadow under every headline. From the late 1940s through the 1970s, America was a middle-class powerhouse. Strong unions, progressive taxation, and public investment built a broad base of prosperity. But since the 1980s, wealth has funneled upward. The top 1%, or more precisely, the top 0.1%, have seen extraordinary gains, while typical wages barely outran inflation. Krugman notes that there are moments when the bottom half gains ground, but they don't last long without structural reform. Inequality isn't just unfair, it's inefficient. An economy that leaves too many behind eventually runs out of customers. Even markets need middle classes. Can capitalism and democracy coexist? Krugman's answer is only with limits. Pure capitalism concentrates power. Pure democracy redistributes it. Balance is the art. Guardrails like progressive taxes, labor protections, and campaign finance rules keep markets competitive and politics accountable. Without them, capitalism turns into cronyism, and democracies decay into oligarchies. The wealthy rarely defend democracy when it threatens their privilege. History shows that clearly. That's why the system itself must defend democracy, through laws, not heroism. Guardrails, not billionaires, keep capitalism honest. So what's the investor's takeaway from all this? Stop chasing headlines, price the fundamentals, and that includes institutional strength. Fed independence, rule of law, and stable government are not abstract ideals. They are the foundation for global capital flows and asset valuations. When those crack, so do markets. Focus on real productivity, electrification, automation, decarbonization, logistics, health tech, the sectors that make the world more efficiently. Forget slogans like, bring prices down or bring jobs back. Invest in the future being built quietly, not the past being sold loudly. In the end, Krugman's message is sobering, but empowering. Economic myths thrive because they sound easy. Reality isn't. Growth can be sustainable, but not automatic. Inflation can be stable, but not zero. The market can thrive, but still leave people struggling. And democracy can coexist with capitalism, but only if we choose fairness over fantasy. Hope, Krugman says, isn't a forecast. It's a choice. It's the decision to build systems that work for everyone, not just the lucky few. The economy is not a single story. It's a living system, and it will only stay healthy if we understand it in full color, not in the green lines of a stock chart. That's the truth behind the illusion. Growth without greed, capitalism with conscience, inflation as balance, not fear. The next time someone promises economic miracles, remember this.
Real prosperity isn't loud. It compounds quietly through policy, patience, and people who understand that boring stability is the foundation of every extraordinary age.